Earnings season continues to roll along, and we've got chips, charges, and chinos on the docket this hour. Here with our trades, Lee Munson, Portfolio Wealth Advisors President and CIO. Hi, Lee. Let's start off with Intel nearly erasing its 2022 losses, 67% gain in the last year. Bernstein watching that turnaround for updates on cost-cutting and its nascent AI efforts, but a little bearish on slowing PC demand. Carter Worth today warning of a potential chip dip ahead. What say you, Lee?
I don't care about where they get half the revenue, which are PCs. I don't care about putting little AI chips on, PCs. What I care about is one thing, is data centers. I think by now we all understand when we say data centers, we mean AI. And so if we see continued sequential declines from 4.4 to 4.1, you're seeing declines in that data center. If that continues, Intel is dead on arrival. The only thing I think will really give you some hope that I kind of think is interesting longer term is look at their foundry business. That thing's doubling. And I think if they can really execute foundry well, then there might be some hope for Intel. But outside of that, I think they're going to be third string to AMD and NVIDIA. Very interesting. All right, a group of financials next. They are set to report. Visa, Capital One, American Express, all three up double digits in the past 3 months, with Capital One the outperformer. Baird cautious, however, concerned about valuation, slowing volumes, risks to consumer credit. How about this group? I prefer to look at this group as a barometer rather than investing in it. I've always had sort of a love story with American Express because I never have to worry so much about their consumers. But here's how I would like to play it. Instead of buying them, how about it you watch them? And you want to see the flows. You want to hear Capital One always complain about how they're having more delinquencies. We're not necessarily hearing that now. But when you start hearing American Express say their well-heeled clients are having a problem, that's when I think that you have to worry about the overall economy. Overall, I'm still bullish on this. I think consumers are going to increase their loans. I think they're going to be able to pay it off. And remember, we're looking down the barrel next year of rate cuts and better roads ahead. I wouldn't do much with them. All right, interesting. Finally, we got Levi Strauss reporting after the bell. UBS calling it one of the strongest U.S. softlines brands, second only to Nike. But recent data show increased promotions and softer sales in an uncertain macro environment. How about Levi's? I disagree. I think Levi's has some problems. They went from 20+% direct to consumer, and now they're down to 10%. They want to be a global denim lifestyle brand? Then what was going on with Beyond Yoga and almost $100 million charge off of that disaster? I think that they're in the same category as VF Corp with Vans, the shoes that I'm wearing right now. It appeals to a lot of guys my age and a lot of sad dads. I think it doesn't have the Riz. When my daughter buys those big baggy jeans with holes in it, Levi's is not on her list. I wish them the best of luck. I'll always buy them. I think you find something else. I'd rather buy Decker that has Uggs. Got to leave it there. Lee Munson, Portfolio Wealth Advisors. That does it for The Exchange. Contessa Brewer getting ready for Power Lunch. We'll be right back after a quick break.